We have seen a major surge in stocks that had come off of the fastest drop in history on a global scale. Looking at which assets have performed the best and why is sometimes a very confusing subject simply because many aren't justified. But this is the new reality of the backwards, upside down, easy Fed money world that we live in. Investors for some reason believe that the Fed can stop any problem, but as we see with Australia, despite record level intervention, in order to keep their silly games going, they now have to take it up a notch. You came here for the truth, so let me unveil that for you. Today we are going to begin by understanding what Bill Ackman had to say. I will give you the historical context first, and then we're going to move into what he said right now. And we got to follow not just what Bill Ackman is doing, but of course what all of these big companies are up to, but not just what you see in the media, the little pieces, the little quotes, but we got to dig a little deeper. We are also going to understand what the Federal Reserve, ECB, and the BOJ have been up to. I'll show you that. And we're going to look at different factors of inflation, whether that's coming in the form of copper or all the different assets over the last year and how their performance has been. All right, so let's get into it right away. I wanted to start by saying that people look at his original quote of "hell is coming" and they don't take the entire thing in context. I don't know what this guy is doing on a daily basis. I'm not defending him or his actions or what he has said, but I always know that when you see a quote in CNBC and Bloomberg and so on, we can't just take those few words. We need to read the whole interview that he did. We got to see what's going on with the 13F, to see all the trades that they've been making, and then compare that in a historical context and see the patterns that are outlined. Okay, but this is something I wanted to mention really quickly here. Bill Ackman warned that hell is coming. He then pocketed $2 billion in bets against the markets. Okay, so right here, he's basically just talking about the fact that hell is coming. Then suddenly he does a 180. That's the way people saw this. But I want to show you something else. This is what he had to say, and this was specifically March 18th, 2020. Some investors have been confused by remarks. To clarify, I am confident that they're going to temporarily shut down the country, close the borders. If that happens, eventually the economy will soar. Quote, that is why we are buying stocks. These are bargains of a lifetime if we manage this crisis correctly. I've been aggressively buying stocks, including Hilton today, and I've been buying all the way down. Hilton, restaurant brands, and Starbucks. So if you take the original quote, and that's all you knew, you wouldn't see this information and how that really plays in to the whole deal. So he was basically just doing what hedge funds do. They are always speculating. That's what they do. They're speculation. And in this case here, this individual saw that there was a correction taking place, but he's buying stocks at the same time. So they hedge their bets. They buy in different ways than the average investor. They're not always going long. That's what we need to understand here. Again, not defending his actions. I don't know what's going on in a daily basis, but we always need to see the broader picture of how these hedge funds work. Fast forward a year later, where we are today, and you could see hedge fund king Bill Ackman bets on interest rate rises crashing the markets. Hedge fund manager eyes a repeat of the trade and netted his funds billions of dollars when stocks plunged last year. All right, now we look into this and you could see that he made $2.6 billion for his funds. Now the fund manager has identified a surprise rise in interest rates as the next big risk for markets. We will see a spike in inflation as early as the middle of the year. It is already starting to happen. At some point, if rates move enough, then it becomes a market risk event. And this is something that people would say, no, impossible, I say. But you got to look at it objectively and realize that this is already happening. And that's why he's saying this. You're watching the rates starting to rise. Not the Fed funds rate, of course, but you see the bond market. And it's starting to freak some people out. Mr. Ackman said that he bought instruments that pay off in a large way in the event of a surprising move in rates. There is a finite amount of money that we can lose, which is not material to the fund, and if we are right on rates, then we make a lot of money. We want to protect ourselves against huge market moving events. We look to buy insurance against disaster. So this is the reason I mentioned that previously, because you have to understand the way that the hedge funds work. If they make one bet, even if it's $2 billion, that's not everything. They're not putting all their chips in. It works a lot differently than the average retail trader. How they just go all in, or they sell everything off, or they make gambles one way, shape, or form. This is different, and I just wanted to highlight that. I think it's important because there's a lot of misinformation that's going on out there, and this is one very good example of that. It highlights it. Now, what's he going to do tomorrow? What's he going to do next week? I don't know. We'll be able to determine this looking at the different trades that any public company is making, so that would be a great follow-up I got to do, and we'll see what happens. Just a quick note on that, you can see from the fourth quarter of 2020, Bill Ackman slims down top holdings in the fourth quarter. So you could see here, you remember what he said he was buying, right? The top 5 trades of the quarter were reductions made in Starbucks, restaurant brands, and he also mentions here Hilton. So that's something interesting because those are the ones he was buying up, and maybe he feels that they have sort of run their course as far as, the trades that he made. And this would be interesting to see what happens in the coming months to see if he made the right decision. The average investor out there believes that the Federal Reserve has full control of what happens in the markets, but of course, that isn't the case. Look at this example here related to Australia. Interest rate jump tests RBA. Companies and governments face rising borrowing costs as the Reserve Bank of Australia fails to suppress bond yields and the strong Australian dollar, despite the central bank's aggressive $3 billion of bond purchases on Thursday. So they're intervening in the markets at we've never seen this before. This has been the most ever, not just the Reserve Bank of Australia has been doing, but basically all around the world. And yet, in Australia, they're unable to do this simple task. Why? Because the pressure is on. When you see what they're doing, they're trying to artificially suppress interest rates. Of course, that's going to have this reverberating effect in the markets that are felt. You cannot control these things without it bouncing back, without it having repercussions. That's what needs to be understood. You can force certain things to happen, like low interest rates, but not without problems along the way. And they're starting to feel that right now. The same thing's going on in the US, and right here, because they've been actively manipulating their bond yields, this is going to have a serious problem down the road, because in order to do this, the only action that the central banks can do is print money. How did they manipulate interest rates? Literally by printing money, of course, in a digital form. The RBA and its policy setting board meeting next Tuesday may consider increasing its $200 billion quantitative easing program to push down market interest rates, contain the currency, and to defend the credibility of its commitment to ultra-low rates. We'll see what happens, but my friends in Australia pay very close attention to this news. There is some serious expectation right now that the Federal Reserve will in fact hike interest rates. Not today, not tomorrow, but in the near future. The expectation here is potentially justified because of what's been happening with the bond market. And the bond market doesn't care what the Federal Reserve meeting is all about. The bond market doesn't care about Janet Yellen, doesn't care about any of these people that are involved in the way that the monetary system, financial system is working. They do what they do, and right now you see it, the implications of the entire intervention that's been going on is really seen, and it's really being visible more and more as they go deeper and deeper and deeper into this. It's a huge mistake. I mean, look at their, this happens to be the Federal Reserve. You could see their balance sheet continues to expand. We've escalated to the point where it's almost $7.6 trillion. You see the ECB going up to, higher and higher numbers every single week for the most part. And same with the Bank of Japan. They're all doing this. We know that it is the case because they want to devalue their currencies. They want to manipulate it. They want to trap more and more people. And it's working very, very well. Even the VIX index, which we know is so heavily manipulated, it's being shorted all the time. And you can understand what occurs here in a time when the VIX itself has increased to a level that is above 30, when you've got all the money printing, all the interest rate suppression, and still, the VIX can actually increase really rapidly in just, a matter of a day or two. So when you see this happening, we need to be aware of how fragile the system really is. That's what it tells us. Looking back over the last year, you could see the asset performance, and copper happens to top the list. You don't find many people talking about that on daily events, but here it is. Looking beyond that, you could see silver, the NASDAQ, of course, MSCI emerging market equities. But what do you hear about? You hear about the S&P 500. The S&P 500 and gets all the news, it gets all the glory. But things like copper and silver had performed extremely well over this period of time. TikTok is global tech living on borrowed time. This is just basically comparing these two charts at the top: world technology 12-month forward earnings yield minus the US 10-year bond yield, and it parallels with the MSCI world. And essentially all it's trying to note is that when we are at the levels we are at today, there happens to be corrections that take place. Some of them are quite small, some of them are larger, but either way, that's where we're at today. Yet another indicator to show you, to give you some idea of what's happening. Inflation is anywhere you'll look, and you could see right now with copper that has been pushed up significantly since March 2020. Just giving you an update, we are going back to levels we haven't seen since 2011, and it looks like if this continues for another couple months, we're going to exceed that. Now, speaking of inflation, take a look at this chart from Deutsche Bank. Inflation series for all countries that we have continuous data going back to 1900 on a log scale, ordered highest to lowest over this period. And it just shows you, all I'm trying to note from this is that there have been countless countries that have experienced extremely high rates of inflation. It doesn't necessarily, you look at one or the other. Once it gets to a certain point, it really doesn't matter anymore, because that hyperinflation destroys the currency, destroys the saver, destroys everything, the livelihoods and so on. But all I'm trying to highlight here is that, yeah, it can happen wherever you are. That's the point. 2 points really quickly. I just wanted to show you kind of wackiness that we're living in today. Speculative crypto art market takes off. I didn't understand what this is, but you can see in this case here, they are charging people, right here, hundreds of thousands of dollars. This one here sold 20 artworks for $3.5 million in December. And to me, it just seems crazy to even think about, but this is becoming a thing now. And then we have this article out of Bloomberg. It's all about sneakers. Sneakers are a big business here, and it's continuously increasing. The speculation is getting into all these different markets. Now, there's always a demand, whether it's for trading cards and playing cards and all these things. But you can see right now with the sneakers, they've gone into this berserk category. I mean, it's crazy. It's just another aspect of this I wanted to bring up, because inflation is seemingly in these different pockets, and this happens to be some of them. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. If you want to learn about e-commerce for free, you can do so at the AmazonGPS.com. If you want to take a look at my books, the links are in the description. And if you haven't seen this video already, you definitely want to check it out. Click it and I'll see you there.